Welcome back to the channel, everyone. Today I want to talk about how the current AMC price action is just two different algorithms, both on either side of the fence, having a fight with each other. And towards the end of the video, I've also got a funny news article from Marketwatch, so stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 4,200 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And just a quick one before I dive in with the key information, if you haven't already yet signed up to Moomoo in the US or Singapore or Free Trade in the UK to get those free shares, be sure to check out the link down in the description below, and also while you're at it, check out the link to the private Discord and become part of the team. And now I want to dive straight in with the key information. So, hedge fund algos are now fighting each other. I believe the price action lately is hedge fund algorithms now fighting each other. When rentech bought a huge position of AMC, their algorithm picked up and is now fighting Kenny G's, also that was programmed for human emotion. We know that rentech, which is one of the most successful funds to ever exist, trade based on large amounts of data which is automatically analysed, and their algorithms trade based on that data and based on that analysis. Therefore, months ago, I think that rentech figured out the AMC cycle. They realised that January was cycle 1, May, June was cycle 2, and they were just waiting pretty much for the start of cycle 3 to jump in. Kenny is obviously trying to still run his algorithm and is trying to short AMC into the ground as much as he possibly can, but he's not doing too well, evidently. With short interest still high and large buy orders not affecting the price much in the past, this makes sense. The number of institutions with algorithmic trading buying long on AMC has now exploded. We've seen tons and tons of large institutions and banks like the Swiss National Bank and large pension funds like the New Jersey Pension Fund all jumping into AMC, and a lot of their trading is going to be based on algorithms as well. A program built to trade against emotional humans that couldn't handle crayon-eating apes then went up against a program made to fight a program built for trading against humans that would lose every time. And that is exactly why rentech is one of the most successful funds out there at the moment, because their algorithm is so strong and the sheer volume of data that they analyse is more than any other fund out there. I read somewhere that rentech actually distribute a lot of their funds back to the investors, and that's why their fund isn't huge. If they never made distributions, then rentech would currently be sitting on around $4 trillion US with their compounded returns over time. To show you what two algorithms fighting each other actually looks like, here's a visual representation of Astro's fractal theory applied to yesterday afternoon. If you haven't already seen that guy Astro's fractal theory on YouTube, be sure to check it out. I'm pretty sure you can also go to his Twitter and he'll have a link there. But to summarise, here's Astro's fractal theory. You've got two cycles of up until rejection, down about halfway, and then staircasing back up. And that's denominated by this number 1 here, up until rejection, down about halfway, and then staircasing back up. You've then got stage 2, which is a downward drop, stage 3, which is the double Dorito pattern, and then stage 4 repeats that same pattern again. In Astro's video, he basically showed you that this pattern repeats itself on a daily basis, a weekly basis, a monthly basis, and in even longer time frames as well. This all links into that same cycle theory that I've been talking about the last few days, with January being cycle 1, May to June being cycle 2, and we're just now entering cycle 3 and should just be about to experience a good run up. I also wanted to use Market Charmeleon to talk about the distribution of trades for today. As you can see, we've got a whopping 16.2% of volume being odd lot trades, 25.2% being sweeps, 63.6% in the dark pool, and 9.3% being block trades. 16.2% is actually really high for odd lots. A lot of the previous days over the last few weeks and months, we've seen between 5 to 8, maybe sometimes 10% of odd lot trades in the volume. Therefore, to see 16% is very promising, and it means that apes are starting to FOMO and buy back in. Well, I guess technically it wouldn't be apes FOMOing and buying back in, it's just retail investors FOMOing and buying back in, because the apes have been diamond handing and holding this entire time. Again, 63% of the dark pool is still a lot of volume, mainly going through the dark pool, and this is where most of that algorithm showdown is going to be. As you can see from Stonko Tracker, there is an absolutely minuscule amount of puts that are currently in the money, and absolutely tons of them that are out of the money. This also shows that there's not many institutions betting on AMC going down because the put open interest is so low. On the flip side, we've already got absolutely tons of AMC call options that are already in the money, tons that are also out of the money but could be moving in the money very, very quickly. I personally think the current call and put distribution is very, very bullish. There's not many puts with open interest that's in the money, therefore there's not many hedge funds or institutions that think AMC is going down. There's tons of calls in the money, therefore institutions and retail investors think AMC is going up. Somebody also picked out a very key comparison between the current AMC price chart and the Volkswagen price chart at the time of the squeeze. As you can see on the Volkswagen chart, we have this small run up here, which is very much akin to the January run up. You then have this larger run up, which is akin to the June run up. And then you have this very, very large explosion and short squeeze. Looking at the AMC chart, we've basically mirrored it absolutely perfectly with the small January run up, a tiny little move back upwards here in March and April, and then the large June run up with a very, very large pullback, as you can see here. And therefore AMC is very much primed to follow this line pretty much directly upwards. And finally, Marketwatch are trying to explain AMC's movement on Monday and Tuesday with FDA approval of a pandemic-related vaccine. Supposedly, movie theatre stocks got a boost from vaccine approval as it fuels hope that vaccination rates will increase. Supposedly nothing to do with a short squeeze and supposedly nothing to do with retail investors winning. Supposedly AMC ran up 9.6% in the afternoon trading hours after being up only around 2% just prior to the FDA's announcement. Yes, this is good for the long-term thesis of AMC, but doesn't necessarily explain one day of movement that we saw on Monday and Tuesday. Earlier in August, AMC chief exec Adam Aron had said in a conference call with analysts after second quarter results were released that vaccination rates played a role in AMC's results, and also will likely play a role in AMC's future as well for their long-term bull case. But obviously, vaccination rates don't play a role in the short-term short squeeze play. However, I'm sure we all know by now that the mainstream media will try and spin absolutely anything so it fits their narrative, instead of giving us, the retail investors and the apes, any form of credit. And finally, I just wanted to go over AMC's price action for today. And as we can see, the MACD is now starting to approach that break-even territory, or the moving averages are at least. Again, it's also another positive day for that MACD, bringing it further into the green territory. Looking at the actual price action itself, we're still green on yesterday and holding around this $45 mark. I'd like to see us push back towards that $50 mark and potentially break that resistance around $48.50, but I'm also not unappeased or unhappy with another green day. A small day of cooling off today would be very helpful and very healthy for a very large run up for the rest of the week. Guys, be sure to let me know down in the comments below what you think about the current algorithmic war currently ensuing between Rentech and Kenny G's Citadel Securities, or Citadel the hedge fund. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!